All right, hey everybody, this is your boy Graph. I'm back to look at the graphs with
Jade.
Jade is here. She's going to take some notes. Yeah. And today we're going to look at bear market bottom, possible bear market bottoms, and possible bull market tops, because some people have been asking me. A lot of people like to try and get me to predict stuff, which I don't particularly like because I don't care. We go up, we go down, we go sideways. But we should look at our historical references to see what happened in previous cycles and see if we can learn anything for what can happen in the future. I obviously have certain targets that when people do ask me, I would give them numbers, but they're mostly based on other people's analysis, like Ben Cowen and people. Let's see. So in our first cycle of 2013, our first little bull run, what we did is completely normal. We had a blow off top and capitulation. So here was our blow off top. Retail joined in, everyone got crazy, and intelligent money sold them all the crypto just before the end, and then they left. And the stupid money were holding empty bags. Now, with our blow off top, we came down to our bear market bottom very quickly, and it coincidentally is bang on our buy line. So, Jade, we think buy lines are important, as always. That's why we have this graph with the buy lines. Now we move on to our second cycle in 2013, our second little bull run. What happened?
It's similar to the other one.
Yeah, we had our blow off top. They all look pretty similar, except what we're doing now. Had our blow off top, came down pretty close to our first buy line. Okay, so for our first two cycles, we can take note that coming down to our first buy line as a reference to where the bottom might be is very plausible. This, of course, means if you bought before the cycle, you still have lots of money, so that's great. And you could have taken out a lot of profit. Now, we shall zoom on to our next cycle and have a little look about that. It should be up here if we follow the lines. Here we go. And here is 2017. And let's see. So here we had our blow off top, but we continued a little bit. Where's our bottom? Bottom's over here. We'll zoom in. So this is our bottom over here. Pretty close to our first red buy line. And this buy line was pretty close too. Generally, our buy lines are going to be good support, Jade. So I would expect to hold a buy line from each cycle. Not always going to be the bottom one, but in these cases it was, but we had blow off tops. Now, if we go to our current cycle, so as I'm looking at these as individual bull cycles, so this is a bull cycle, and later on, whatever we do, I'll consider that another bull cycle, of course, if we break our all-time high. Now, remember, this is not a blow off top, so it will have different technical analysis. Now, what happened here was we came down to our buy line. Oh, surprise, surprise. Now, of course, with this not being a blow off top, we didn't have what is normally in previous cycles, Jade, the capitulation has been like 85%, 84%. People are speculating 83% for this cycle as they're coming down a little bit. But overall, it's pretty much the same if you left your money in and you don't really care if you're out. So now, this being a local top, it wasn't 80%. As we can see, it was from 64 to about 30, which we can say is around 50%. Now, first to have a second bull run, I wouldn't be surprised if this ended up being our bull market, our bear market bottom. But of course, we could come down further. You can also see that we use this yellow line from the yellow line is 2013 as our bottom here. Now, the issue here is blow off top and 80-something% capitulation. Whereas if we have another local top, it might only be 50%-ish. Now, I understand a lot of people are looking at local tops as something that's going to happen again. And it's not my expectation, Jade, but this is the first time we've had it. Patterns repeat, as you know. In our last video, we looked at how this pattern was very similar to this.
Yeah.
I don't believe that people do it intentionally, as I've explained about when we did a video on manipulation.
Yeah.
I believe it's just market psychology as a whole with all the people that are involved. And of course, what you have is the people who bought in 2008 and 2013 make so much more money with a 2x than you could possibly think, because they're multiplying like millions and millions and millions by another, adding on another zero. So they take profit earlier and they can give us local tops. So for us to have more local tops wouldn't be surprising. It's not my prediction, but more local tops would mean we would just keep doing this until we have a blow-off top. Now, we've stated the importance of bylines. So I think this byline could easily be the bottom. Let me see. Now, we would consider maybe March or May next year as a reasonable time to finish. Some people think we could end as quickly as December. People who believe in 4-year cycles, which I see no technical analysis that says that's even has ever taken place. That would stop around here in December. And let's say we go to 150K. So if we went to 150K, way up there, we would come down to 40K, right down 150K and 40K. And that is 67, 70%, which would be less than I would expect if we got a blow off top. But remember, I don't expect us to come down in December. I will be looking further on. March or May or anywhere in that area. And then just on our bylines, we'll be looking at around 48K, coincidentally where we are today. Now, there are other ways to look at this as well. From bottoms, what we'll do is we draw some straight lines. So I'm going to zoom back to 2013 and we'll put in the tops of our markets and see how they compare to where we are now. Because I haven't graphed these out before, but I'm well aware that previous tops in the market can be very relevant. So let's see. We'll draw, we want an array to go off into the future. Up here at the top of our wick and all the way across. I'm going to make this nice big line so we can examine it. And we'll pop it in orange. I like the color orange, and make it big and make it a line. All right, now, so that was our top, and you can see it's not too far off where our bottom was, 260. Yeah, you'd lose a little bit more money, but that's a possibility. And now let's go to our next one, and we'll draw in another array from here at our peak. Go straight across. And see how that behaved with our next bull run. Because they look very similar to our previous trends, really, even though they are diagonal lines. Maybe the people who have looked at these have only been looking at them recently. Let's see. Okay, so to be honest, looking at these, I don't find them very relevant at all. I understand these would be great places to test, and we do test them. We certainly do. We can see previously down here, we tested this one. Not really a test here. So I wouldn't take these lines into account, really. I'm going to get rid of them. That is us looking at possible bottoms. And what I'm going to do next is I'm going to add in some Fibonacci extensions so we can see how what fibs we hit for our tops, and see, figuring out what our tops were and where they could be in the future. If they can help us determine what our bottoms and tops will be again, adding in the data we have with our bylines. So our first cycle in 2013, we'll need a Fibonacci extension. So a lot of people I see on YouTube use Fibonacci retracements for going both up and down. I find this quite silly. Retracement. What do you think retracement is for, Jade?
To go down.
To go down. And extension is to work out when we're going to go up.
Oh yeah.
Now,
Makes sense.
Over here you can get your fibs, fib retracement, fib extension. And to draw a fib extension, you need 3 points. So you start from the bottom of your move. And let me see. So I will start from here. Now you can put these in different places. You get similar results to the top, and we come down to the bottom. Okay, so I just got that line to the bottom. Oh, we're down here, sorry. Bottom down here. Bottom of the red candle was our bear market bottom. And how did that reflect to our previous market? Did it give us any indications? We went pretty much to the top. Let's draw that across. I'll do it from the bottom. Okay, so from 2013, the first bull run, you can go and you draw your extension and you go up to your fib of 4.236, and you sold here, you would have been a genius. So that's interesting. Now I'm going to take that one out so I can draw a new one for here. Well, I won't. I can just zoom it back like this. Zoom, and we'll leave it there. I don't want my graphs to get too cluttered. I might delete these things for another video if we're using the same graph. So then we go to the same place and we go to the bottom of our move before we went up. We click there, straight to the top, click there, and go down to the bear market bottom. Now we know from earlier, the bear market bottom is a little further over here. Let's see. Here we go. Now, can this have any relevance to our future market, our future bull run? I don't know. Let's check. I want to be clear, guys. I haven't looked at these things. I'm just doing them now. Oh, wow. We are nowhere near. We just exploded. Okay, let's see. We'll pull it out. Nowhere near it all at all. Now, what can we do? Anything on that? Not really. So you wouldn't want to sell here this time. Let's see. Interesting. So that didn't work at all. We could try another one. But what is relevant is that the two cycles, the two bull runs from the same cycle, do correspond. So we'll go to our current cycle and we'll put one in and see if we can do anything similar. So current cycle is right here. So it looks like we were only able to compare with the cycle when we had two bull markets. That's okay. That's what we're doing now. So we get our fib extension. We go from the bottom. Let's say we go from here. We go to the top. We go back down to where we retraced. Now, let's see what kind of number this will give us. Go out nice and far. Oh, that's way too far. That's not silly. Now, so, oh, up and away. That is giving us a number of around 300K. I don't think that sounds ridiculous. That's very much in line with with Ben Cowen's thoughts. I think of lengthening cycles and diminishing returns. I think 300K would almost be as high as it goes. And I feel like this is a very achievable number and certainly very possible if we were to have a blow off top in the next short time, let's say May or March or April somewhere. Put it in here. Now, could our blow off top hit this buy line? Most certainly, that wouldn't surprise me at all. Now, that would give us a top of, as we said, about 300K. And we would then expect approximately an 80% drop. An 80% drop from approximately 300K. Let's see. Right, give me a pen, we'll write it down. You can do this on the computer as well. I like to write things down. So 300K divided by 100 is what, Jade?
3.
3. Nicely done, Jade. That's 3. So that equals how many percent?
I don't know.
1%. 1%. And we're going to say 85% drop. So we need to calculate 85%, or we calculate 15%. So multiply by 15. And 3 times 15, Jade? 45. 45. Now, as we said, with our byline, that of course, very, very speculative byline. This byline here, and what we said previously was that we come down to around the area we're at now, which was about, that was in December, and further on our byline in March would be about 49. So using these metrics of my bylines and fib extensions on these markets, I very dubiously, as Ben says, come up with the possibility of somewhere in the 45K to 49K region as a bear market bottom. And just using a very simple fib extension, said that it's possible that maybe we go to around 300K. I will repeat, this is only something that I would believe in if we had a blow off top and not a second local top, which is not a prediction I'm making, but something I will always remind everybody, because this is our first ever local top and as a signal that the psychology of the market changed for the very first time and gave us one of these. So the possibility of more are certainly capable. So that is very quick look at what a bear market bottom could be.
Useful information as well. Sorry, Graph. Very useful information.
It is, and it's very dubious. This is,
yeah.
But if I was to guess without any information, I would have been happy with these numbers. And it's nice to have a little bit of ideas of how it could work. And we'll see if it does. We don't know. All right, so there is possible bear market bottom and bear market top with very simple analysis. You know, on this channel, I don't like to make things too complicated, even if I draw in a load of confusing lines. So there you have just random possibilities, numbers I would be content with if we were to have a blow off top in 2022. I would be, if someone said, oh, the blow off top was a 300K, I'd be like, sounds pretty reasonable. Because what we did here was a 6X. All right, in our first part of our bull run. Now, of course, looking at the second part of our bull run, what you have to do is decide where you think the bottom is to work out what a 6X would be. And I'm not saying we'd have a 6X, but you see a lot of people say repeating this 6X. A lot of people think it's very plausible. A lot of people, Ben Cowen would think we would probably do less. Other people think we could do more. But what I am looking at is it's a blow off top would do more than a local top. So I wouldn't be surprised if we did a 7X or an 8X from the bottom of 300K, which like if it was an 8X would bring us 240. And chances of doing a 10X from there are also quite high, which would bring us closer to the 300 mark. And once again, my number goes higher if we have another local top. So guys, if we have a local top and you lose loads of money, go, yes, we're going to make more money. The bull run is not over. This is what these things apparently signify, because we're the in smart money, and the market is still buying. The on-chain data is still looking good. Everything looks great. We're above our bull market support band, blah, blah, blah. Everything looks fine. I don't think we're going to just crash and burn, but we'll wait and see. So I'll be back again in a couple of minutes. I have another topic I'd like to talk about. I hope you enjoyed this video. Goodbye and good luck. Jade, I really think everybody loves you.